Welcome to Profiletraders. This is Reza and thank you for listening to my market analysis for Friday the 27th of March. What we saw lately, it was a very strong outflow of capital out of the market. As you can see it on the daily chart better, we see that even during the last retest of the high, we were not seeing buying coming in at all. And here, even though that it has started to stabilize somehow after the break of the main trend line, we are still seeing massive outflow of capital from the market. And the general view of the chart at this stage, it is still very bearish for reasons that we could not pierce through 2100 on the second retest. This retest was done on absolutely diverging, declining buying, and then we have also broken the main trend line up, and we are still trading below that trend line, which confirms the break to be valid so far. And this kind of retest of the break point, it is something seen very commonly before a serious leg down would start. Therefore now critical support comes in at 2030. If we do break this 2030, there is really nothing before 1979. Of course, with 2000 being a round number, that will attract some attention when price gets down to it. If we look at the general macroeconomic point of view, you are starting now to see earnings being revised down. You are starting to see capital spending shrinking. You are starting to see a Federal Reserve as fresh as Friday. Madam Chairman was out there stating that she is going to look into raising rates end of this year, and all the other issues floating around. And this being close to the 7th year of a parabolic market, it wouldn't be such a dumb idea to possibly taking some money off the table, knowing that possibly this party is coming to an end, especially if the Federal Reserve on his own will or forced by whatever variable reasons to raise rates in the future. Market is never enthusiastic when the Federal Reserve starts to shift its direction from 0% to possibly higher. Therefore now be very careful that once we do break this 2030, so now between 33 to 2030 becomes significant support. This level breaks, it could be quite dramatic on the downside. As for the upside, God bless them. Come on buy, come on buy. It doesn't matter. I don't believe that we are going to go retest at 2100 for a long while. So short-term support now, it's at right around 2057. We can clear that, pierce through. Then there is a POC up there at 66.5, and then you are dealing with a very important, extremely important level of resistance at 2070. So little bracket going on. I am not at all enthusiastic on any upside chase. I think any upside until we remain below 2100 is a sell opportunity. This market has potential to literally melt down at any given time, any given day, because it has been extraordinary and unjustifiably abused to the upside. As for crude, I mean, giving you a valid analysis would be wasting your time. It's wild, wild west. It's all agenda-driven moves. It's all geopolitical. It's all craziness. All I can tell you is that capture short time frame runners, take your money and move on. Trying to figure out a direction in this thing and sticking to it for a trend catching operation is extremely difficult, because you get very emotional moves, all created by geopolitical news from the Middle East and agenda driven price manipulation, in order this one harming the other one, this one bringing price of crude to shut down the young oil producer in the US. Anyway, thousands of stories floating out there why it is doing what it is doing. Bottom line is that when there is so much news attached to a market and it's all BS, it's very clear sign of uncertainty. As of right now, resistance in here is at 49.5. In order to do anything on the bullish side, we need to clear 49.5 and then eventually go back for a retest of 51. And on the downside, there is obviously a POC down there that is begging for price to come to it at 46.89, at which point, with what's going on in the Middle East, I believe down there could be a very, very good, decent support, going from roughly 47 to 46.5. That should be a strong support zone. Now for gold, it's still holding very, very bullish, very, very bullish. Even though that the selling on the volume side was quite heavy, they could not bring this puppy down. So if it continues to hold strong like that, it's a matter of time that we are going to go pierce through 1200, go retest this 1221, and then if we can break that, fly towards 1250. So if I was going to draw an imaginary trend line down, it would come up to a break above 1205 that we need to see in order for price to return back into bullish territory. On the downside, now 1192.5 to 1189.8 is support. If we do break that, it is very possible that we're gonna go delete all these little labored move to the upside and then come for a test of 1179 or 1180 if you want to round it up. So that's it for today. Let's see what Monday brings us. It is going to be a very interesting week because there is a lot going on in the Middle East. Thank you for listening. This was Reza with Profiletraders.com. If you wish to join my trading community, you can get all my courses and my room membership for 1 year, $550, money back guaranteed, 30 days. Have a great weekend.